probably going to hit $8,000 before.
What was that number?
8,000 until we totally flush
So you
out
have
what's
no
going
more
on.
holdings?
No.
Okay,
I mean,
well,
if I were, I'd be short.
Their capacity is 2% or lower. In a market of 100 million barrels, that is very low.
It's clear from what Sue Gray has had to say that some of these gatherings then went on far longer than was necessary. And they were clearly in breach of the rules, and they fell foul of the rules.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, here's what's coming up on today's program. Aggressive policy. Fed minutes show agreement on the need for half-point hikes in June and July, but questions remain over the path for rates later in the year. Stagflation signs at Apple. The iPhone maker announces that it is keeping production flat for 2022 at the same time as raising salaries amid a tight labor market and unionization efforts. Well, Nasdaq futures fall on the news. Plus, must-watch interviews this hour live from the World Economic Forum in Davos. Our guests include the Moderna Chief Executive Stéphane Bancel and, of course, Trade Minister of the UAE. But first, let's check in on the markets. And I have to say, it's never dull being in Davos, certainly not being on the rooftop of the Congress Center. We heard sheep, we heard helicopters, we also heard the bells tolling in the church behind us. Stocks mixed today, traders again weighing the Federal Reserve minutes that struck a less hawkish note with downbeat remarks on China's economy by Premier Li Keqiang. If you look at futures, they're pretty much a bit volatile. European stocks gaining some 0.4%. It's really the energy shares leading this advance on the stock 600. Oil rising, technology shares though underperforming, and then treasuries advancing and the dollar steady. This is a picture across the board when you look at the European map. And again, it's extremely interesting. Things then change as we go on throughout the day. But if you're a country that is very exposed to commodities and oil rich, you're probably doing better than some others. Today, I would point to two great interviews we've had so far. We had an exclusive interview with the Saudi Aramco chair. We'll bring you all the headlines from that. And then we also spoke to the Rio Tinto chief executive a short while ago. I guess investors now taking some comfort from the Fed minutes that didn't show an even more aggressive path being mapped to tackle this inflation. Now let's get to another conversation here at the World Economic Forum. I'm delighted to be joined now by the UAE Trade Minister, Thani bin Ahmed Al Zawoodi. Minister, thank you for joining us. I mean, there's a lot going on and you're negotiating trade deals. Is the world coming together? Are we going to have deals or are we further deglobalizing?
Well, thank you so much for the invitations. The supply chain and the trade were dominating most of the discussion throughout the Davos. It's a big issue. We saw it through the pandemics and now with the geopolitical matters. And the world has to get together if we really want to cool down this high spikes on the prices. Every commodities that is reaching to the parts of the world. Are we going to reach a deal? It seems to be very difficult from the discussions. No. Every countries and nations are putting their interests on the table, but we at the UAE we're taking different directions. We're opening up and we're continuing. Signing deals with countries, so we continue with the same globalization definitions that we know before.
So, Minister, how many deals are you expecting to sign? Actually, are there specific sectors right now that could benefit from multilateral or unilateral deals?
The key sector nowadays is the logistics, because we want to ensure that the smooth commodities are moving from one place to the other. But throughout the discussion here and throughout the Davos and even the outcomes which we're going to take forward, how we're going to ensure the implementation of the mega trade deals that has been signed, like the RCEP, for example, and how we're ensuring that is going to be expediting having 30% of the global world in one block. As a UAE, we signed the first comprehensive economic partnership agreements just a few months ago. It got into effect earlier this month. We have now an access to 1.4 billion markets. We're signing one next week with Israel, and we're going to continue doing so.
Minister, I mean, we spoke to a number of very big players in, of course, the oil and gas space. With energy so elevated and the oil price so advantageous, Does it make it more difficult for the UAE to diversify away from oil?
Well, the diversification decision has been taken decades ago, so it's not new for us. And this diversification process went through the different waves of prices going up and down throughout the last 15 years at least. And we managed to move quickly on our plan. The minute that you have a goal and you have a systematic approach, you're going to do it. And that's what exactly we're doing in our preparation for the upcoming 50 years through different projects that we launched. Openness, liberalizations, continuing investing in industries, and attraction of the investments to the country.
So nothing's changed?
Nothing changed, and we're going to continue with the same plan, diversifications and knowledge-based economy. In knowledge-based economy, the human capital is the key aspects of this movement.
Are there certain sectors, I mean, when you look at diversification, or we're talking about logistics, but is it logistics can really take a bulk of economic growth going forward?
We do have an excellent logistic infrastructure, and we're connected to at least 250 ports and almost 400 cities around the world. Are we going to take this forward? Absolutely. The investment is going to be continued, and through the different agreements, we're going to ensure that we're bringing the efficiency into the supply chain that we're having. The other sectors which we're keen on, for sure, we're going to continue with the conventional sectors, the tourism, the petrochemical investments, health, food, etc. But at the same time, we're going to focus on the futuristic sectors, fintech, the technology, advanced science, which we saw the importance of those sectors during the pandemic and during the last few months.
I mean, of course, it's extremely difficult to move things from A to B because of inflation, because of shipping. Are you expecting supply chains to normalize after the end of this year, or can this kind of fluctuation of prices and uncertainty stay for much longer?
Well, from the forecast, it seems to be the worst has not come yet, and the prices of the commodities are going to increase in the upcoming few months. The other challenge, the global challenge which is going to face the world, is the real production itself, the cultivations of commodities and wheat and grains in particular, which is going to be next season. So the wars are going to come. What we want from the world that they have to work together. The synergy is very crucial now, and let's put our egos and our political matters aside and think about how we're going to come out more strongly from this tough situation that faced the world.
And when do you think we'll be over the worst? When's peak stress for trade globally?
It's going to happen soon. So in the upcoming few months, we're seeing things are picking up.
Have you enjoyed Davos? Anything productive? What's the question you've been getting the most?
Very much how the UAE is tackling this, and throughout the various engagements of our delegations and ministerial participations, we sent very strong messages that we're part of the global. We're going to do the best to bring the best practices, and we're going to continue with the same principles that the nation has been built upon: sustainability, openness, and communications, and reaching out to everyone. And that's the message that everyone has to carry out from Davos.
Because of the specter of recession globally, in certain parts of the world, do you think trade deals are being signed quicker? Usually it takes years. Do you think there's going to be an acceleration of that process?
It all depends on the willingness of countries. We saw that throughout our discussion and negotiation with India. We did it in 88 days. We did the second one with Israel in 4.5 months for deals which usually takes more than a year or two. So if the willingness is there from both parties, things are going to progress. The same thing with RCEP, which has been discussed as well earlier today. It all depends on the countries in moving quickly and see the added value of such agreements. Let's forget the small stuff, which is going to be a barrier, but the bigger picture has to be always the key objectives and aims for all of us.
Minister, thank you so much for joining us on Bloomberg TV today. That was the UAE Trade Minister, Thani bin Ahmed Al Zawadi. Now, we're also getting some pre-market moves on Twitter, actually up some 5.7% in U.S. pre-market trading yesterday. Late last night, there was a huge flutter of news on Twitter. Elon Musk dropping plans actually to partially fund his purchase of Twitter with a margin loan tied to his Tesla stake, increasing the size of the deal's equity component to $33.5 billion. Now, on the back of that, and also on the back of board changes, Twitter gaining some 5% in pre-market trade. Coming up, we'll speak to Takeshi Niinami. He's the president of Suntory Holdings. This, again, a conversation on inflation, on supply chains, and of course shipping. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. It's day 4. It's been exhausting. We are like running on caffeine. I'm going to look at the right camera because I haven't had enough espressos. I am delighted to be joined by Jacinda, who's on top of it. I'm like a walking mess because we've talked about inflation. We've done like 500 panels. And the mood is, I think, one of resolve. Chief executives want to do better, but it's very difficult to see when all of this bad news ends.
Well, you're right. It's a challenging environment, and for a country like Japan in particular, Fran, it's also about the weak currency. I mean, we've been talking about how Japanese companies can't stop talking about their currency at a 20-year low, and you know what? Where will it go from here? Let's get insights.
Yes.
Right.
Great. Bring our next guest in.
Yeah, that's right. Takeshi Niinami, President and CEO of Suntory. Takeshi, good to have you with us. I mean, how are you looking at the weekend? The worst currency among G10, the worst currency among Asian economies as well. And here we are. I mean, how are you coping with a weak yen?
Well, we announced increases of some key brands, both soft drink and alcohol beverages. And I don't think our clients and consumers are happy with that, though they can afford at this moment, but I'm not sure toward the Christmas time, because wage hike is not enough. But things are more complicated between B2B, which means corporate to corporate, more than 10% increase of prices. But we can pass to consumers just maybe 5%.
Why? Because you're worried that they then go to a cheaper brand, or you have some very, very high-end, very luxurious drinks. Can they not afford a 20% hike like the Chanel bags?
As a matter of fact, those big brands who are premium or ultra-premium brands, we raised the prices already by now. But I'm talking about standard products like beer, like water.
No.
So people are accepting to some extent, but I don't think 10%. It's almost impossible to convince consumers and
so fair
clients.
to say you're increasing your prices again. I need more coffee.
Or a whiskey? No.
You're going to increase your prices again then?
Right.
To what extent?
Except branded whiskey. However, we have to think about what to do with the clients, because retailers are resisting not to accept any further increase of prices. So we will be fighting, but I don't know what will happen.
Tak, where does these pressures come from? Right. So we're seeing it from everything to shipping. I guess it's packaging, plastic bottle. I mean, there's nothing. Do you see this inflationary pressure just stay on for the foreseeable future, or are you seeing in certain parts of your supply chain those prices going down?
Depends on Chinese policy of the zero COVID. For example, there are so many ships waiting to ship out in Shanghai. We found lots of shipments there.
Yeah, and they're sitting there.
Right. So I hope the lockdown of Shanghai will be eased around the time of, let's say, mid-June. And then things will be better, because the total demand is same. But, this kind of lockdown is shutting down any flexibility of global supply chain. So it's a matter of China.
No. We've been talking about inflation, and BOJ says that inflation at 2% is not sustainable. It expects that rate to decrease. Do you see that? I mean, we've seen the mistake being made by the Fed. Transitory, but it's not transitory anymore, and it's done in about 10.
Well, it's up to the acceptance level of the consumers, which is not strong. So BOJ is analyzing the mentality or psychology of consumers in Japan. I think from the standpoint, BOJ is right. But we businesses have to convince the consumers to accept higher prices, which means that we have to be more innovative, such as health consciousness, such as innovative products like zero sugar content beer. So we have to be more innovative so that we can be accepted by consumers. Otherwise,
Right.
the current momentum is toward the not accepting, huge hike of the prices.
So this could be also like, non-alcoholic gins, but I guess the margins on those, again, you can't demand the same prices as some of your, 30-age whiskey.
Exactly. I mean, we have to change our portfolio. But just like whiskey, which is based on brand, so we can't change the brand.
Yeah.
But our business comes from soft drink, nutrition products. That's much more than the alcohol products.
What are you positioning for? Are you positioning for a recession, a slowdown? I mean, expectations are the U.S. would, and you have a big market there. What are you positioning for?
In case of the U.S., I think a recession is coming. Maybe earliest first quarter, maybe second quarter of next year. So we have to be careful how we increase the prices. As a matter of fact, we've been increasing prices of our premium and the ultra premium brands. But it comes to the standard like Jim Beam, I think we are very much cautious to increase prices. Key thing is how to innovate our products, how to increase our quality. So based on that policy, I think we can talk to consumers and clients to accept the price increases.
Tak, does that also actually mean a lot more volatility for yen? And again, we started off talking about yen. Is there anything that you can do to hedge against these currencies?
Well, because of our portfolio of sales, we should rely on more businesses other than Japan. And like North America, emerging Asia, which is, under the still fight against the COVID, but it will be coming back because young population and India. So we are shifting to those countries, and we are putting less resources to Japan.
No.
M&A plans? Because you said it's difficult to do M&As when the border is still shut. Now that Japan is opening up and opening up maybe in a more significant way, are you looking at M&As?
Well, in terms of the brands, I think we will be acquiring some key brands and sell some of our tail brands. I think that should be more activated.
Like what? Wait, this is.
I can't tell you.
You're selling, you're
Francine,
buying.
I can't.
This is like business happening. What would you ideally want to buy? And is it because valuations are cheap, or because it would really add something to your portfolio?
And
Well, we can't add the value, such as we acquired On the Rocks, which is ready to serve. It's doing fantastic, such as with the airlines, with the hotels, because the travel is, now back. So we can possibly acquire that kind of, ready to serve or shelter. Those products are now, drunk at on-premise and off-premise as well. So, and we can increase quality. That's our strength as Suntory.
Yeah. Great. So you'll have to come back for that breaking news, Tak. Thank you so much for joining us. Haz and I could do with some pocket coffees or something like that. The Suntory Holdings President, Takeshi Niinami, there joining us. And thank you, as always, to Haslinda Amin here in Davos. Now, coming up a little bit later this hour, we'll also speak to Stéphane Bancel. He's the chief executive of Moderna. That's a conversation not only on vaccines, but we'll ask him also about monkeypox and whether we should worry about that. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Yes, it's warm and the coat has come off. It's very strange to see Davos without snow. The conversation here, of course, on politics, on inflation, on food security, and on Ukraine. Now, we'll have plenty more from Davos, but now let's get straight to the Bloomberg First Word News. Here's Alice Aikens. Hi, Alice.
Hi, Francine. In the UK, Prime Minister Boris Johnson's government will lay out a plan to help Britain struggling with the rise in the cost of living. Chancellor of the Exchequer, Rishi Sunak, will reveal a comprehensive response to help households. The offer will be partly funded by a windfall tax on the profits of oil and gas companies. Brazil President Jair Bolsonaro said he and President Biden will have their first one-on-one meeting next month. Bolsonaro told CNN Brazil that he will try to reset the relationship with the US at their next meeting in Los Angeles. Bolsonaro is coming to the US for a regional summit. The massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. Philippine Central Bank Governor Benjamin Diokno will be the country's new finance secretary under President-elect Ferdinand Marcos Jr. Marcos made the announcement in a televised address confirming an earlier Bloomberg report of the central banker's move. BSP Monetary Board member Felipe Madela will serve as the head of the Monetary Authority for the remainder of Diokno's term. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Alice, thanks so much. Alice Atkins there in London. Now, coming up, more of our exclusive conversation with the chief executive of Saudi Aramco. Today, oil up, and it's really dragging higher some of these energy stocks. Overall, stocks a little bit mixed. The focused firmly on what we heard from the Fed, the fact that there was no more hawkish rhetoric coming from the Fed. And that's, I guess, in certain parts of asset classes giving a bit of relief. This is Bloomberg. Aggressive policy. Fed minutes show agreement on the need for half-point hikes in June and July, but questions remain over the path for rates later in the year. Stagflation signs at Apple. The iPhone maker announces that it is keeping production flat for 2022 at the same time as raising salaries amid a tight labor market and unionization efforts. Nasdaq futures fall in the news. Plus, more must-watch interviews this hour, live from the World Economic Forum in Davos. We'll be speaking to the Moderna chief executive, Stéphane Bancel, very shortly. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, let's cross to Doha, where our reporter Simone Foxman is with Torsten Müller-Otvos, the Rolls-Royce Cars chief executive. Simone, over to you.
Thanks, Francine. Torsten, we are so happy to be here with you today. You guys came off a record 2021 year, record sales, in part, I think you said, because COVID made people realize life is short. How's 2022 shaping up, and is it the same driver behind?
No, 100% right. First of all, thanks for having me here this morning, Simone. And no, it was a fantastic year, 2021, even better than we thought in the beginning. And yes, there is a certain, let's say, truth in it, what I said, that people recognized or acknowledged that life can be short, and that made them think you only live once. Enjoy your life, and that's the reason why
So in 2022, have they changed their mind?
No, not really. But that's the reason why we also had a fantastic first quarter, which is great for us, and also the next quarter looks good. So I think we will see again quite a strong year for us, despite obviously some constraints happening in the world. When you think about the Ukraine war, Russia, not any longer a market for us because we immediately ceased the Russian business.
So give me a sense of how your order book looks like overall and how that's impacted your order book generally.
Yeah, I mean, we've never sold so many cars to Russia by intention. We always kept it pretty, let's say, limited. And I think that was a very good decision to do so, because for us it is not a big issue, let's say, to deroute or reroute these kind of orders into other markets worldwide. We currently have one of the strongest order books ever. If you order today, you will probably take delivery in a year, even longer. A black batch Cullinan, just to use this example, you probably wait until fall next year already. Wow. And that's a pretty long order bank. And I mean, it's great business for us, yeah, and it's all over the world, pretty strong. I mean, we currently see in China, due to COVID lockdowns, a certain slowdown. But I'm pretty sure once China is reopened after COVID, that business will again strive.
Well, a big thing for our Bloomberg viewers is the chip shortage. I know you've told my colleagues in the past that BMW gave you guys first priority allocation in terms of semiconductors. Is that still the case? And how much visibility do you have right now into chip supply?
I mean, so far we have been very lucky because the group provided us with everything we needed. There are some chips we need to source ourselves, and we are on it daily. We haven't lost a single car due to chip shortage worldwide, and I think it was a very wise decision as well by the BMW Group, because you can imagine contribution margins per car are in the brand Rolls-Royce the highest, and for that reason it's good to get all the chips from them, and yeah, that made our business also very robust and yeah, running.
Okay, how about supply chain issues in terms of, you need parts? China has various shutdowns, as well as Brexit has posed an issue for some automakers.
Yeah, supply chain is something that worries us, I would even say daily, and we are on it. And now with all these port lockdowns in China, we also see certain constraints now. We are flying now parts that makes it, let's say, faster for us. We bridge it by air bridges, as we call it. And I think that's something which you really need to concentrate on daily, and to make sure that your production still gets all parts. If only one part is missing, I can't finish the product, obviously. Your point about Brexit. Brexit is not really such an issue for us. It's a little bit more complicated now, maybe to export and import parts. But I think we got over it, and it is now something we understand and how we handle that, and for that reason that's not an issue that puts any constraints currently on our business.
You're here in Doha in part to open a new showroom. This is a place where you don't even really see very many hybrids driving around, and electric vehicles are the key for you, all electric by 2030. So how do you go about selling these vehicles in a place where there's been slow uptake?
Yeah, I mean, for us, this is not automotive business we are in. It sounds funny, yes, our products have 4 wheels. It is technically automotive, but the rationale for buying a Rolls-Royce is luxury good. And I think as long as the proposition is excellent, I'm not worried about that. And rest assured, Spectre, that's the car you are talking about, our very first electric Rolls-Royce that comes into the market by end of next year, will be a stunning Rolls-Royce, promised, and it will not in any way disappoint clients. It is first of all a Rolls-Royce, and second, it's an electric car. We also know that all our clients do have many, many cars in their garages. It's similar to like our wardrobes. You have for every occasion the right means of transportation.
So they need to have a Rolls-Royce, a Spectre, an electric vehicle in there.
And it's anyhow about all of them have home charging without any problem. They have charging at the offices where they travel to. It's never long distance travels. So I'm definitely not worried about it, as long as the product is stunning and is emotionally appealing, and this is the case, I promise. Okay, well, emotional appeal of Spectre. What can you tell me about some of the technical specs, battery, range, those sorts of things? We're all eager to hear. I bet you are all eager to hear, but I'm tight-lipped on that because we are currently in the testing phase. We've just started a couple of months ago the very first testing at Arjeplog, our Arctic Circle testing ground, and for that reason next steps are going now even into hot climate and so on. We will talk at a time. I can assure you it will be sufficient, as Rolls-Royce is always talking about numbers, and clients will not be disappointed about it. I'm sure. It sounds like a sexy car so far. Just finally, you've made this decision to skip plug-ins and go to all electric 100%. Entirely. How do you know that gamble has succeeded? I mean, first of all, we are probably the most customer-centric company on earth. We know, and I'm not saying me in person, but my organization knows really every single client. That's the reason why we are also very shy with volume growth, because you can only do that kind of direct interaction with clients when you have a certain, let's say, size. Clients are telling me very much that this is the right thing to do. It fits perfect to Rolls-Royce. It's silent, it's talky. We are not defined by loud exhaust noise or roaring engines, whatever. Rolls-Royce was always about silence, and that is exactly what electric propulsion brings. And it even refines Rolls-Royces up to next levels, I would say. For that reason, I'm pretty sure. that this is a very good decision.
Torsten, thank you so much for joining us. Torsten Müller-Ottbusch, the CEO of Rolls-Royce Motors. Francine, I'm very excited to get in one of these silent, interesting vehicles. Hopefully someone will take me for a ride in a Rolls-Royce when these come out.
There you go, Simone. The offer's out there. Simone wants to be picked up in a Rolls-Royce. Simone, thank you. Simone Foxman there with the Torsten Müller-Ottbusch Rolls-Royce Cars Chief Executive. And it's extremely clear that if you're at the really high end of luxury, you can demand higher prices. Demand is there. We were also having a conversation with the Valentino chairman saying that the rich have gotten richer, but actually it's food inflation, security, and of course everything that has to do with famine and the potential impact on food prices. That's worrying a lot of participants here in Davos. Now, coming up, we'll also speak about COVID, vaccines, and health with Stéphane Bancel. He's the chief executive of Moderna. That's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, joining us to talk about the vaccine, COVID. Do you remember that? It feels like because we're going from crisis to crisis, a lot of people have forgotten we had COVID-19 just months ago. We are delighted to be joined by Stéphane Bancel. He's a Moderna Chief Executive Officer. Stéphane, a great pleasure to speak to you. I feel like large parts of the world, including the US, is now saying, look, it's like COVID never existed. Are we too complacent?
I think in many parts of the world we are too complacent. Still, people are getting their boosters. I think there's a lot of fatigue, as you know. I really hope that as we go into the fall, people get their second generation booster, the one we're developing now, that we should be able to launch late summer. That will be adapted to Omicron and have also to mRNA, the old virus in it as well, the vaccine. I think that's really important. What I worry about is especially people at high risk, 50 plus, immunocompromised, people with comorbidity, not getting their booster in the fall, and then in the fall or winter getting COVID, but having very low or no antibodies left, and then being severely sick. So
what's your biggest concern? I mean, there's a development of the vaccine. I guess, the gold standard would be to stop the transmission. Mm-hmm. So it's not that I don't get as sick, is that it completely stops it, or is it convincing people still that your vaccines are safe?
It really depends on the groups. That's why I think it's tough to have one rule. You still have a lot of people that have not been vaccinated with any vaccine. And then you have people who thought that vaccine will protect you against everything, transmission and disease forever. And given the virus is evolving so fast, I think it was not an hypothesis that was correct from a scientific standpoint. I think with time, as the virus slows down its mutation, because it's not going to evolve in an infinite way, it just cannot because of the size of a spike protein. I think we're going to see longer and longer protection. If you remember, the current vaccine against Alpha and Delta held very well. It's Omicron, because the genetic drift was so big that it didn't help as well for infection, but it helped for hospitalization.
But is this going to be a yearly jab, and can you combine it with flu?
Yes and yes. So we believe for people at high risk, again 50 plus and so on, we, in the category, we're going to need an annual booster, but it's going to be in a quick injection, and it's going to be having a nice winter. And what we're doing is indeed combining all the respiratory vaccine into one, so flu and COVID, and RSV and others that people don't even know of, but they get sick with, so that you get one shot early in the fall and you have a nice winter.
But this is for, I imagine, Western countries, right? There are large parts of the rest of the world, China, with still that zero COVID policy. How will that evolve? Are we going to 2-3 speed? And how difficult is it to also convince emerging market countries that a vaccine is safe and that they should take?
Yeah, so I think the emerging countries have done a great job understanding the technology. They have great scientists and doctors and vaccinating their people. It's, of course, it depends on some countries. Some are not as well vaccinated. I'm worried about China and the current policy. I think it's unsustainable because the virus only becomes more infectious. So I think what was amazing management of a virus in 2020 is turning a liability now, and the only way out is having high efficacy vaccines.
Yeah, but is it because the vaccines are not as efficient, or because people don't want to take the vaccine in China?
I think it's both. I think you have a lot of older people that have not taken any vaccine, And then the vaccine efficacy was not great with the initial strain. So think about what it looks like with Omicron now.
Stefan, the share price of Moderna has been under pressure. Why?
I mean, one of the things I don't control is the stock price. I think people don't see the power of a platform. Unlike traditional biotech companies that are analog companies, onesies and twosies of drugs that have no correlation, all of our 30-plus vaccines in development, 30-plus vaccines, are all using exactly the same chemical matters as the COVID vaccine, which has been approved by the authorities. And so if you look at it now, we have 4 vaccines in phase 3, and we're preparing those 4 launches. What I'm very excited about this year is we're going to get data in liver or rare disease, in cancer later this year. We just announced that with Vertex, we have found a way to get mRNA inhaled into the lungs. We're going to start with cystic fibrosis. That will be in the clinic this year and straight into patients. So with $20 billion of cash on the balance sheet, so it's around a little bit less than half our market cap in cash, and this platform for which we're investing behind, and we're buying back shares. I think people that are buying now are going to be really happy down the road.
But is this a regulation, timeline concern? So do you believe that because of COVID and the vaccines were approved so quickly, that this kind of speed can be used for other vaccines, or will it slow down again? So
it will slow down a little bit, but where the mRNA platform is quite magic is if you look at our flu and our RSV, we're able to go from starting a phase 1 to starting a phase 3 in around 12 months. It takes usually 4 years with traditional medicines, with the same regulators. So I think the platform in its speed is going to still deliver a lot of value for patients and investors.
Stefan, we saw Pfizer sell certain drugs actually at cost in certain countries that need that the most. You're selling, I believe, stock options or shares for nonprofits. Is our relationship, or is the healthcare relationship with charity and doing good for the world changing?
So I cannot comment about Pfizer, but I can, of course, applaud what Pfizer is doing for low-income countries. I wish we had done it earlier, because those countries have been suffering for lack of product. As you know, we are selling our vaccine at cost in low-income countries, like Pfizer is doing for the vaccine. And we're going to have a very progressive strategy for low-income countries as we launch more products. So my stock option is something quite different. It's just that my first grant as CEO of Moderna is going to expire next year. Yeah. It's a pretty big grant, because the company at the time, was pretty tiny. The strike price is 99 cents. And so my wife and I decided to give all the proceeds to charity after tax. It's just that what we want to do is that we don't need all that money, and we want to use the money to help suffering in the world. There's so much suffering in the world that we want to use that capital to help foundations. And maybe it could inspire others. So if you're watching, think about this as well. Stefan, what should I do about monkeypox? Should we really worry? Is it like just a case of concern? So we're monitoring closely. We're also working in the labs on vaccine candidates, just in case. But we believe because the way the virus transmits from one human to a human, which is very different from flu or from COVID, it's not airborne, it's from body fluids. So I think it's mostly, intimacy, where you can contact the virus. So we think this outbreak can be contained. Public health authorities around the world are acting with a lot of urgency. Yeah. But I think the scenario that this turned into another pandemic is close to 0%. Has the pandemic changed actually our relationship with, new diseases that should concern us? I think so. What I worry about is because there's so many crises around the world that some governments are going to forget what just happened. But you have Moderna's commitment that we won't forget. We are building new plants around the world to build the distributed networks, Canada, Australia, more to come, Kenya, but more to come. We're working on the top 15 viruses that have been on the watch list of governments forever and scientists forever that nobody has really worked on. And we have committed in March in the UK that we're going to take into the clinic vaccine against those 15 viruses, so that if, God forbid, something happen again in terms of pandemic, we will be ready and go much faster than last time. Stéphane Bancel, thank you so much for joining us here on Bloomberg TV. That was, of course, the chief executive of Moderna. Now, coming up, more interviews throughout the day here on Bloomberg. Also, we have this exclusive conversation with the chief executive of Saudi Aramco. That's coming up next, and this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Davos. Now, markets, I have to say, they were a little bit encouraged by the less hawkish stance that we had from the Fed. Markets, though a little bit volatile, the FTSE was gaining. Now it's pretty much flat. Dollar stable and treasuries higher. Now, oil markets are balanced, but companies need to invest more in production to meet rising demand and prevent even higher price volatility. That's according to the Saudi Aramco Chief Executive Officer, Amin Nasser. We spoke to him exclusively here in Davos.
I don't want to talk about prices, but today we don't have a lot of spare capacity. Spare capacity is 2% or lower. In a market of 100 million barrels, that is very low spare capacity. Usually spare capacity give a comfort to the market that in case of any type of disruptions, interruptions anywhere in the world, that spare capacity will kick in and will supply the market. Right now it is going down, and it's quickly as OPEC and OPEC Plus releasing 400,000 every month. So very soon you have a world that 100 million barrels or more with basically no spare capacity.
So does that make you nervous, not having that buffer, that prices shoot up uncontrollably and that hurts demand?
It's always good to ensure that there is enough spare capacity in the market to supply or to mitigate any interruptions that might happen. You know, we've seen a lot of interruptions that's happening in different parts of the world, and that spare capacity will always help. Right now, I have been talking about for a long time, lack of investment is really not bringing additional supplies to the market, and there's not much investment going on.
So what's the solution for that? Because even if we start investing now, because of the crisis in Ukraine, the timeline is going to not match when we need possible extra supply.
You are absolutely correct. We have been, you know, since 2014, we're spending approximately $700 billion. We went down to almost $300 billion. We picked up a little bit to close to $400 billion in terms of investment. But that is not enough, especially with the increase in commodity prices. So you need more in order to even maintain your current supply in the market. It will take years to build any project. We announced our increase in capacity by 1 million barrels in 2020, and it will come to the market in 2027. So it takes time to do engineering, and it takes time to bring that capacity to the market.
Does it mean that we could see a lot of volatility in prices from now until then?
You know, there is need, as I said, for more investment. There is short-term investment that can happen. Shale oil can come to the market much quicker, but it is short cycle. But you need both. You need also an investment in long-term project with more sustained plateau for 20 and 30 years. And that is not happening that much. You know, we are doing our part in terms of investment, but you need that to happen from all players, all energy companies globally.
That was the Saudi Aramco Chief Executive Officer, Amin Nasser, speaking to us here in Davos. This is what the markets are doing. A lot of people, when you talk and walk across the Congress Center, will ask you, hey, you're Bloomberg, what's the market doing? Because they do look at it as a benchmark of a correction that could be front-running a recession. Treasury yields falling after the Fed has signaled it could be flexible. So stocks a little bit mixed today. Again, traders weighing what the Fed minutes showed. They struck a less hawkish tone. We also had some downbeat remarks on China's economy by the Premier. I'm looking at energy shares, pretty strong. The best performers in the Europe stock 600, oil climbing. Data showed that further decreases in U.S. crude and gasoline stockpiles are coming ahead of the key summer driving season. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, Anna Edwards is in London, and this is Bloomberg.
Globally, there are going to be countries that have some really serious challenges.
I think fragmented globalization is what we have.
We still believe that the economy is a very global economy. You know, like reports of the death of globalization have been highly exaggerated.
The reality of the supply chain situation, though, is that every company, every electronics company is having to redesign for geographic resiliency.
I don't think you can just paint big tech with one paintbrush.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, May 26th. Our top stories today. Apple faces smartphone market headwinds. Bloomberg's learned it plans to keep iPhone production basically flat for this year. Elon Musk revises his bid for Twitter. He's dropping plans for a margin loan tied to his Twitter stake. Plus, he'll increase the size of the deal's equity component. And the Federal Reserve saw that aggressive rate increases now would give it more flexibility later. Minutes from the last meeting show support for half-point hikes in June and in July. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Kailey, tech news from Nvidia to Apple and other places, certainly a big focus as we get closer to the US session.
Yep, still about 4.5 hours to go until the opening bell here in the U.S. But of course, the closing bell, Anna, already has rung in Asia. It was a mostly down session overall. You had stocks down in Japan, in Hong Kong, but China actually managed to close the day in the green, albeit only by about 0.25%. But of course, in China, investors are still weighing monetary and fiscal stimulus against the economic backdrop that the Premier Li Keqiang said in some ways is even worse than the start of the pandemic in 2020. And you can see those growth concerns reflected in the Chinese bond market, with the 10-year yield coming in down for a fourth day in a row. Right around 274 is where it trades at the moment. That is near the lowest level since February. And also you have the Chinese yuan, the biggest underperformer among Asian currencies, weaker against the dollar by about 0.7%, trading around 675. Your big outperformer in Asian currencies, though, is the Japanese yen, stronger against the dollar to about 126.66. You had the BOJ Governor Kuroda talking about how that central bank is going to be able to exit from its decades-long monetary policy, also saying that more U.S. rate hikes won't necessarily weigh on the yen, Matt.
All right, very interesting stuff. I just ran over to my terminal to check our 10-year yield here in the U.S., see how many days it's been down. Actually, only 3 days in a row, because Monday we were at 286. Look, right now the 10-year yield is at 271, 272. So investors have been buying bonds for the past 3 days because of concerns about equities. We were up yesterday in the cash trade, closing up about 1%, but today the futures are down just a bit. Crude continues to rise. We're seeing both NYMEX and Brent rise. Right now, 111 for TI, and Brent is up around, I think, around 114, 115 right now. Bitcoin is down 3%, 28,895, so below 29,000. Typically, retail investors or even maybe institutional investors go pile in at 30,000. So this is one of the very few days in the past year that we've seen it below 29,000. You may see buyers come in and pick it up. Anna, what do you see in Europe?
Yeah, a lot of interesting news flow surrounding Bitcoin overnight and what the miners are doing on that front. This is the European picture then, Matt, and it actually looks pretty mixed, pretty divergent. A lot of these markets responding to their own individual influences. The London market is flat, waiting for news there of a political and corporate nature later on. The CAC 40 and the Xetra DAX make modest gains to the upside. We started out pretty flat, and we've been following really the vibe coming through from US futures in the first couple of hours of trading here. You'll notice a big area of red, though, in the center of this map, and we don't often talk about the Hungarian market, but that is in focus for us, and we'll get to that story in just a moment. The government taking action there. If we can roll on and show you what's going on here. This is some of the specifics around stocks I wanted to show you first before we get to some news out of Central and Eastern Europe. ST Microelectronic down by 1.9%. This, of course, a read across from the Apple news, the Nvidia news, nervousness around chip stocks here in Europe as well. BT Group down by 4.6%. It seems that the stake being taken, or that was taken last year by the billionaire Patrick Drahi of Altice. He's a French billionaire. He took a stake of 18% in this BT telecoms business here in the UK. That's going to be reviewed under security legislation, the second time in a couple of days that the UK government has drawn on that legislation to review some M&A. And here we've got the ruble. This is actually the ruble weakening a little bit. We saw a slightly bigger than expected rate cut coming through from the central bank in Russia. They've been concerned about the strength in their currency that's been driven by capital controls and perhaps also also by some of the policy decisions and the sluggishness in changing policy around commodities here in Europe. We'll talk more about that with our FX guest a little bit later on. But certainly we're seeing some movement in the ruble and Budapest. This is what I was referring to, Kailey, when I talked about the map. We've seen the government in Budapest, the Prime Minister Viktor Orban coming through with a windfall tax, not just as we've seen in Italy and we might see in the UK later, not just on oil and gas names, but this is a windfall tax on all what he calls excessive profits. It goes across the economy. It's oil, it's gas, but it's also retail, it's banking, it's everything. And it does raise some interesting questions about where that kind of windfall tax policy goes.
Absolutely, and that's something, of course, we will continue to follow on this program and on Bloomberg Television more broadly. As for what else we will be following in the day ahead, Turkey will be reporting its rate decision at 7 a.m. New York time. We'll look for any reaction in the Turkish lira. Then at the same time, Alibaba will be reporting its earnings results. Plus, on the economic data front, we'll get GDP from the U.S. at 8:30 a.m. New York time. And finally, more retail earnings, including Macy's and Gap. Matt.
All right, we begin with the Bloomberg scoop this morning. Apple is planning to keep iPhone production roughly flat this year as the market grows more and more difficult. Bloomberg's Danny Berger has the details for us on all things tech. Danny?
Yeah, Matt, it seems like it's been a really rough 13 hours for tech. Last week was maybe the week to freak out about retail. I wonder if this is the time to worry about tech. Now, to be certain, we're not freaking out here. Apple only down by less than 2%. But this is tech really coming on board with all these macro headwinds. With Apple, it is them keeping production flat. And also, earlier overnight, at least my time, Apple saying that they would have to raise wages in order to combat the tight labor market and also unions. So that's a story of higher costs and flat growth. Certainly gives you that stagflationary type feel. But it's not just Apple that concerns are abound by. Anna, you mentioned Nvidia. They were warning basically on every macro force you could possibly warn on. They warned about Ukraine. They also warned about supply coming out of China. So supply issues there. Nvidia down about 6.25% pre-market. And then you also had Snowflake warning about growth. Corporate spending they feared would slow. That's down about 15% pre-market. So you really get this whole encapsulation of tech, no matter what kind of tech company, all the ones we've been hearing from really throwing out the warnings.
Well, and elsewhere in tech, Danny, of course, we continue to follow the Twitter Elon Musk saga. And now that margin loan is going away.
Yes, indeed. So you'll recall that part of the loans that Musk had gotten for this package was $12.5 billion specifically to him. So these were personal loans, and the collateral for it would have been Tesla. Now, the issue for that is that Tesla shares have lost about a quarter of their value over the past month. And if it had stayed $12.5 billion, that margin loan, he actually wouldn't have had enough unpledged Tesla shares to put up the additional collateral needed. So earlier this month, he announces he has some equity backing that essentially slashes that need for debt in half. Well, yesterday we got the announcement that he's doing away with all of it. So now the trouble is not necessarily getting that extra collateral, but getting the extra equity. Where will it come from? He mentioned in the filing he's going to ask existing shareholders like Jack Dorsey to stay on board in the company. But of course, Anna could end up selling more Tesla as well to get the equity.
He could. Danny, thanks very much for the update. Danny Berger on some tech themes overnight. Back to the macro, and the Federal Reserve saw that aggressively raising interest rates would leave them with more flexibility if needed. That's some of the story coming out of the minutes of this month's policymakers meeting. Joining us now to share his thoughts is Mark Caldwell, Bloomberg Markets Live Managing Editor.
What a treat.
Mark, good to see you once again this morning. I know Mark and I present a show a few hours earlier than this, which might be news to the US audience. Let me ask you then about what you took away from the Fed minutes. You had some hours to think about it. Some people saying this wasn't as hawkish as they'd anticipated. Others saying, hang on, this does not contain any dovish messaging.
I think it's the latter camp I'm in. I think, first of all, I haven't taken away loads from this because it is a few weeks old. I think it's been surpassed by events. But I think the dovish interpretation is slightly mistaken. I think they've made very, very clear they're going to focus on inflation. That was actually slightly more hawkish in that message about being expeditious and trying to reach neutral rate rather than, we've moved way beyond transitory from a year ago. They're very, very focused on hiking. And I think this idea of flexibility in the future, yeah, that's a truism. Of course, if they hike more now, they have a little bit of flexibility. But I think it's misplaced to overly focus on that element.
By the way, I noticed China's Premier Li offering some pretty almost dire warnings. Are they getting prepared to break away from their, 5.5% growth target in China?
I think they might be, but I think simultaneously, I think they're going to really ramp up the efforts to boost growth as much as possible. Bloomberg Economics, I believe their forecast for this year is 2% growth, so way below that target. Now, I think the Chinese government are going to fight back and not let Bloomberg Economics be right, not because that's their goal, but they're really going to bring out the bazooka. And my team in China thinks that Li Keqiang's messaging this week was a real ramp up in the rhetoric we've seen from China. So the theme of the last few months has been the Chinese policymakers making promises that they're going to support the markets, making promises that they're going to support the economy, but ultimately all they deliver underwhelms. My team in China thinks the signaling this week was different from Li Keqiang. It shows they're really, really super concerned that this is an existential risk for the Chinese Communist Party, its leadership. They need to step it up, and the fact that Shenzhen immediately followed through on concrete measures is an important sign that may be missed by some of the American audience arriving in.
All right, Bloomberg's Mark Cudmore, great to have you this morning. Thank you so much. Now let's turn to politics in the U.S. Of course, the massacre at a Texas school earlier this week has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. President Biden spoke at the White House yesterday.
Second Amendment's not absolute. When it was passed, you couldn't own a cannon. You couldn't own certain kinds of weapons. It's just always been limitations.
Anne-Marie Horder, and Bloomberg Washington correspondent, joins us now from D.C. for more. Anne-Marie, we know Second Amendment issues have long been a problem. It's hard to rally bipartisan support around the idea of universal background checks or an assault weapons ban. What is the likelihood of some kind of compromise on these red flag measures?
Well, it's definitely a starting point that there could be a compromise. I would say we're nowhere near there just yet. But there are several Senate Republicans, most notably Senator Marco Rubio, who want to give grants, money to states to be able to enact these red flag laws, which basically says a family member or any individual in society, law enforcement can go to the court, get a judgment, and go and remove a firearm or not be able to allow that individual to buy a firearm if they're deemed unstable or a dangerous individual. Now, you have already 19 states and Washington, D.C. already have these red flag laws, and a lot of these states enacted them after another deadly, horrific massacre, and that was the Parkland, Florida high school shooting. So there is potential for this. Steny Hoyer, the House Majority Leader, he is on recess along with other House members. They say they're going to debate this when they come back. The issue, of course, would be what kind of compromise this really looks like in the details to make sure that 10 Republicans, they can get on board. Senator Chris Coons yesterday was being a bit more pessimistic, saying we'll never get those 10 Republicans to sign off on this. So that's really in the Senate where this would become a hurdle.
Anne-Marie, thanks very much. Thanks to Bloomberg's Anne-Marie Horder in Washington. Coming up on this program, currency markets in focus. We'll talk to Chris Turner, Global Head of Markets at ING. We will talk about the strength of the dollar. Have we seen peak dollar? We'll also talk about what the central bank in Russia is doing with the ruble and commodities and supply chains. Part of our interview with the Rio Tinto CEO, Jakob Stausholm. That's still ahead. Plus, a long time coming. Today's Big Take story examines how market collapse of tech might be a great opportunity for the industry to reckon with its success. Read more by typing NI Big Take into your terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. We have talked and will continue to talk a lot about the Fed. We're going to talk a lot about credit spreads and how they affect the markets. But I also want to focus in a little bit on China. We touched on it with Mark Cudmore just a moment ago. I've got a chart showing economists' forecasts for 2022 GDP projections, and they just continue to fall. 5.5% is the official target, and typically China hits its official target, but economists have lowered their expectations first to 5.4%, then to 5.2%, then to 4.9%. Now we're expecting 4.5% growth, which is far below. That would be a massive gap compared to how close China is to its targets historically. Let's bring in Ben Rahm right now, a Bloomberg Markets live strategist, to talk about how this affects global markets. How important is the Chinese engine, Ben?
Morning, Matt. The Chinese engine is, of course, incredibly important to global supply chains, so the manufacturing engine of the world, of course, and all that. But, what is happening in China is not surprising. I mean, we are not going to get growth of 5.5% in this environment where we have got COVID zero policy implemented as zealously as it has been. And with the yuan is at 670, around 670 levels, it needs to weaken a lot more for the economy to grow. But on your question specifically for how this impacts Fed and the global policy making, I don't think the Fed is going to go stop because China growth is going to slow, because it is known that growth is going to slow. U.S. growth this year is not going to be anywhere near as robust as last year, but it is still going to be above trend growth, and the Fed will take that. At the moment, the Fed is preoccupied by three words: inflation, inflation, and inflation. And they're going to go at it, and they're not going to stop.
Okay. And then we know what that has done to expectations for tech stocks, and we see futures down once again on the NASDAQ. How far can the NASDAQ fall in your assessment? You're taking clues from credit markets, I think.
Absolutely, Anna. If you look at the credit spreads between the investment grade credit and the earnings yield on NASDAQ, there is an uncanny correlation between the two. And in the past 10, 12 years, what that suggests is there's a strong mean reversion tendency between the earnings yield on NASDAQ and the credit yields. So if you look at that, we are like minus 45 basis points between the earnings yield on NASDAQ and investment grade rates. So if that lopsidedness corrects itself, we are due for a 9% drop in the NASDAQ from yesterday's levels.
Will the Fed tolerate that, Ven? Will a Fed put not kick in at that point?
No, I don't think the Fed is going to be unduly concerned about that, Kailey, because it's the Main Street that the Fed is concerned about, not so much as Wall Street. If NASDAQ falls, they will see it as a correction. They've anyway said any number of times that asset values are stretched. And if NASDAQ falls and S&P falls a bit more, they are not going to be worried. And their focus is right and center on inflation at this point. They're not really going to lose sleep over some drop in the S&P or NASDAQ.
Okay, so the Fed's not too worried about the pain in equity markets, just like the Bank of Japan doesn't seem all too worried about the recent weakness of the Japanese yen, yet it's strengthening today. How sustainable is that?
I think the yen is vastly oversold, and it's incredibly cheap. If you look at the real effective exchange rate on the yen, it's the cheapest it's been in decades and decades. So there is a valuation metric at play. Kuroda this morning in Parliament told parliamentarians that, look, we will manage an exit if there needs to be an exit. It's not going to be unduly stressful on the BOJ. But he wasn't suggesting that they are going to exit imminently. In fact, he said that 2% inflation in Japan is not sustainable beyond this year. And if you look at the take-up on the BOJ's rate auctions this month, they haven't had any takers at all. So it doesn't, and the yields have come off the 25 basis points band for the upper threshold for the 10-year yield. So there is not a whole lot of speculation that Japan is going to abandon its curve control policy anytime soon. But that said, the yen, as I said, is very cheap, and therefore it will advance a bit more.
Ven, thanks very much. Ven Ram joining us there from the Bloomberg Markets live team with his views on various asset classes. For more market analysis, check out MLIV Go. That's the place you'll find the Markets Live blog on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Apple faces smartphone market headwinds. Bloomberg's learned it plans to keep iPhone production basically flat for this year. Apple's asking suppliers to assemble about 220 million of the devices. Elon Musk revises his bid for Twitter. He's dropping plans for a margin loan tied to his Tesla stake. Plus, he'll increase the size of the deal's equity component. That could reduce the risk of the deal for both Musk and his lenders, especially especially given the recent 40% drop in Tesla's stock price. And the Federal Reserve saw that aggressive rate increases now would give it more flexibility later. Minutes from the last meeting show support for half-point hikes in June and in July. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Matt, what's the focus pre-market over in the US?
Well, it looks like we have at least turned positive on futures, but it's interesting. Okay, very slightly positive, but it's interesting because we still have investors buying bonds right now, pushing the yield down to 272. Like I said, Monday we were at 286. And investors are also still selling off Bitcoin. We're back above 29,000, but just barely at 29,075, and that's off 2.3% from where we were at midnight. So there's a couple of risk-off indicators. I'm not sure how much higher we can climb on futures, especially with the news out of Apple and the news out of Snowflake, maybe weighing on tech stocks today. NYMEX crude is up to 111.16, and we see Brent up as well, so a little bit of gains there. I think there is a little bit of faith, maybe, Kailey, put in China's ability to ramp up stimulus, and in the Fed minutes saying maybe, you know, if we raise enough, we could lower later. I'm not sure how solid that is.
Yeah, how hawkish or dovish were those minutes, really? I think that is still a question up for debate this morning, Matt. Of course, you mentioned the news out of Apple, the news out of Snowflake. I'm going to go ahead and elaborate on that a little bit. Of course, Apple, according to Bloomberg's reporting, going to keep production of the iPhone steady this year, around 220 million units. They, of course, are facing a number of headwinds that they already had warned about. The idea of supply constraints going to have an impact on sales this year. That stock is down about 1.5%. And speaking of supply constraints, COVID-19 and the issues that it's having on production is weighing heavily on Nvidia. It reported after the bell last night its revenue forecast came up short because of some of those issues. That stock is down the better part of 6%. And as Matt mentioned, Snowflake really taking it on the chin this morning, down about 14% in early hours after it signaled slower revenue growth to come. It, of course, is that cloud software company, and its growth is slowing down. One more positive story out there, though, is Twitter, which Anna mentioned. Elon Musk getting rid of that $6.25 billion margin loan, instead going for $33.5 billion worth of equity to fund his deal for the company. That seems to be giving Twitter investors a little bit more optimism that this deal will eventually go through. That is reflected in a stock moving higher by about 5% this morning, getting closer to that $54.20 offer price. Though, Anna, we're still trading on Twitter at 39. So that gap is shrinking, but it's still pretty wide.
Still there, then. The gap still exists. A lot of tech themes, then, Kailey, as you've just detailed, and some of those spilling through into the European session. Overall, we see that the Stocks Europe 600 is up by 0.25%. Here's some tech weakness, though, for you, and focusing in on what Nvidia had to say in particular. This is a chip maker here in Europe, ST Microelectronics, and it's down by just over 2%. Tech is one of the weaker sectors in today's session. BT Group down by 4.3%. This is a telecoms business, and we saw a French billionaire, Patrick Drahi, last year take a stake in the company, and it's up to 18% now. And we just heard from the UK government this morning that they plan to review that under national security grounds. Clearly, telecoms being critical infrastructure for the nation. We're talking here about the Russian ruble. We heard from the central bank in Russia. They brought forward their central bank policy meeting by a couple of weeks, and we got a surprise size of cut from them. It wasn't a surprise that we saw a rate cut, but we did see a surprise in the size of it. It was bigger than expected. It has led to some ruble weakening, which apparently was the intention. We will talk to our next guest about that then, Matt, a little bit later.
Yeah, absolutely. But front and center, really, the dollar. Tom and Lisa had a fantastic interview with Scott Minerd yesterday out of Guggenheim. He says the dollar's outlook depends on what the Fed does with rates. He spoke from Davos.
I think as long as we stay the course on tightening, which I think we will through the summer, the dollar's going to do fine. But if the Fed blinks because of financial panic, which I think there's a high probability of toward the second half of the year, then I think the dollar will come under pressure.
Chris Turner, ING Global Head of Markets, joins us now to talk about this. And, you know, right now we're at 1230 on the Bloomberg Dollar Index at an historically high level here. Does the Fed blink, especially considering what we saw in the minutes yesterday? Chris, what's your view?
I don't know. I thought those minutes actually were pretty hawkish. It was pretty confident. They looked through the kind of weak 1Q GDP figure and focused on strong consumption, strong investment. And James Knightley, our US economist, thinks 2Q GDP will be pretty strong. So I think it's probably too early to say that the Fed blinks. So we've already had quite a good concession in US rates over the last 3 to 4 weeks. The pricing of the terminal rate for the Fed next year has come off about 25 basis points. And perhaps that's kind of nearly enough for the time being, because as we think there will be 2 further 50 basis point hikes. And I think the dollar stays pretty strong this summer.
The dollar stays pretty strong this summer. Good morning to you, Chris. So what does that mean for the euro? We've heard a lot about the euro this week. We heard from Christine Lagarde setting out her plan, quite a candid assessment of where we go. That triggered a lot of commentary from the hawks, which moved the euro. We then saw some commentary from the doves, sort of fighting back. So where does that leave us? We're at 106.93 right now.
Yeah, I think we're probably moving into a range, maybe like 102 to like 108. So recently we're at the top of the range, and I think the hawkishness coming through from the ECB was really a kind of like verbal intervention in a way. How do you try and support euro-dollar? You try and talk up the prospects for ECB kind of tightening. But I think you could look at Lagarde's blog on Monday as potentially trying to bring everyone together. And you saw the hawk from the Dutch central bank, Klaus Knot, yesterday saying, you know, fully subscribes to everything in the blog. So I think we're sort of settling down onto a path of 25 in July and 25 in September. And perhaps that run on the euro hawkishness, the topside run in the euros perhaps has run its course.
Yes, she told our colleague Francine, of course, she doesn't like to talk about FX, but you do wonder if there was anything to do with getting closer to parity that triggered that thought process, or at least setting it out so openly. Let me ask you about the ruble, because we saw sudden weakening of the ruble given the invasion by Russia of Ukraine and the war that takes place there. But then real strengthening in the ruble as capital controls were brought in. Too much strength to the ruble, it seems, for the comfort of the central bank there. And we got surprise scale of cuts today to interest rates. What did you take away from what we saw?
Yeah, I think definitely you're right. The ruble is too strong because it sort of cuts FX export earnings for the Russian budget, and that's their concern there. So ideally, they do want a weaker ruble, but we probably think the ruble would only weaken later in the year once the EU really agrees on those embargoes on kind of Russian oil, and that's in the balance for the time being. It seems that that's a direction of travel. Over the short term, though, I think ruble is very much driven by domestic commercial flows. So Russia is still earning FX from, gas and oil. Imports have collapsed, so the current account is very strong. So it's a very kind of artificial domestic commercial market for the time being. But I think the rate cut in itself won't really damage the ruble. It's really got to be the impact on Russia's FX export earnings, which will impact it.
Okay, Chris, so Russia's cutting rates. We know a number of central banks around the world are hiking them, including the Bank of England, and that's on the monetary policy side. On the fiscal policy side, we just had some headlines crossing out of the UK government saying Rishi Sunak, the Chancellor, will be giving comments to the Commons at 12:30 p.m. UK time, 7:30 a.m. Eastern time. And according to the Times, he will be announcing £600 payments for 8.4 million households, of course, trying to deal with the cost of living crisis as people face higher prices. At the same time, growth is slowing down. How do you view the specter of stagflation in the UK and what it means for cable?
Yeah, well, the sterling certainly kind of weakened over the last month on those Bank of England effectively forecasting a recession in 23 at a time of high inflation. So that reassessment of the Bank of England profile lower on the back of those comments had weighed on sterling. But today, though, I mean, you talk about, in a way, fiscal stimulus coming through from the government to address that cost of living crisis. And perhaps you could argue that sort of looser fiscal policy might allow a slightly sort of tighter monetary policy to come through from the Bank of England. So actual today's event news, I think, could actually be marginally sterling positive. But for the second half of the year, the market still prices a lot of Bank of England tightening. The rates, well above 2% by the end of the year. And our house view at ING is perhaps there's a pause at about 150. So there might be a period of reckoning for sterling in the second half of the year.
Okay, Chris, we've almost completed our lap around the world. We've talked the UK, Europe, the ruble, the dollar. Let's turn to Asia, because as we talk about fiscal and monetary factors in the UK, you have China attempting to introduce both fiscal and monetary stimulus to offset some of the growth impact of COVID-19. How much success do you expect them to have, and what does that mean for the yuan?
Well, at the moment, it feels like there hasn't been a big bazooka-style support to the Chinese economy, and you're seeing that in the renminbi. So I'm a FX guy, and we look at, the renminbi is a big determinant of non-dollar currencies right around the world, and the renminbi, having had a big a sell-off, 6%, mid-April to mid-May, and then a big recovery. I think we're now moving into like a 665 to 680 renminbi range. But the renminbi is telling us, and you probably say Chinese equities are telling us, that they're yet to be convinced by the size of these stimulus measures. And I think the jury's out, and the external environment with higher dollar rates will make an environment for a stronger dollar and keep the renminbi under pressure.
OK, we'll watch the Chinese currency then, Chris. Thanks very much. Thanks for your time, Chris Turner from ING. Coming up here on Bloomberg Television, Apple will keep iPhone production flat in 2022. We'll discuss the challenges ahead for the smartphone industry next. We also heard about their plans with regards to pay in the United States. We'll throw that into the conversation too. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, former U.S. Ambassador to NATO, Kay Bailey Hutchison. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
We are constantly improving our product, our policies, and our processes in order to earn more trust. We believe Twitter is a place for different voices and perspectives to be heard. Our rules are enforced objectively on content and accounts, and our policies remain neutral to political identity and ideology.
That was Twitter CEO speaking at the company's annual shareholders meeting yesterday. Now, elsewhere in tech, let's turn to the Apple story and the Twitter story as well. Elon Musk, of course, is leading his financing plan. He's tweaking it and increasing the size of the deal's equity component to $33.5 billion. Let's get more on what's happening in the tech sector with Alex Webb of Bloomberg Quick Take. So, Alex Webb, $33.5 billion in equity he now has to raise, but at least you have the removal of the risk of the margin loan. That seems to be giving investors some confidence now that maybe this deal will actually go through. Why would Elon Musk make these tweaks if he didn't ultimately want to buy the company for $54.20 a share?
Well, there, of course, were risks to Tesla shares as a whole, that there was a sort of implied message that if he was taking a margin loan against his Tesla stock, perhaps it means that he thinks Twitter is a better investment, moving capital towards that. There is still a long way to go in this deal. There's a lot of suspicion that Elon is going to try to renegotiate. We've seen not just Twitter shares, but social media stocks as a whole decline over the past few weeks as marketing budgets have become increasingly squeezed. And so now that he has a greater equity component, there might be, in fact, more pressure on him to try and reduce the price as well.
The most interesting thing to me is just the drop in Tesla. Unbelievable that it's fallen 40% since he made his offer. Let's get over to Apple. It's now a much bigger company, planning to keep iPhone production roughly flat in 2022. What do we take from this?
Well, there's a push and a pull here. There's the demand piece, inflation, of course. These are expensive products. So even though Apple iPhone customers tend to be perhaps slightly wealthier than those of Android, there are plenty of people whose budgets are being squeezed and maybe can't afford one. But there's also a push element, which is the supply chain, that maybe they can't get all the components they want. They had to they told the market that this quarter had been affected, the quarter in right now, by supply chain constraints. So you take those two things into consideration and you see Apple tamping down the numbers. Of course, we don't know. Apple doesn't publish anymore how many iPhones it sells. This is purely from our reporting and balanced against the market's expectations, which have been for 240 million iPhones. We're now reporting it's likely to be 220 million.
We were just looking at a graphic there that was talking about the different dynamics going into Apple at this point, and you've talked about the demand and the supply for the handsets themselves. But there's also the margins to think about. There's also the cost base that they themselves are facing, and that leads on to a conversation about wages, because they've said they're putting up wages for, is it retail staff in the United States?
Well, I think it's actually staff as a whole, which of course there are two pieces to that. The biggest number of employees is are the retail staff. They have globally 400 stores. Of course, a large proportion of those are in the US. They're facing competition for staff, of course. They're also facing the threat of unionization, which has hit Amazon. Amazon has seen some unionization at some of its locations, so perhaps it's a preemptive effort to fend that off. But you then also have their engineers who are being poached or have been poached over the past 18 months, 2 years by Facebook in particular, as it accelerates into hardware. So they're fending off multiple fronts here with this sort of move.
Fending off multiple fronts. And where does that leave us on the Apple story then, if they've got all of these headwinds sort of assembled at this time? That had somebody on one of our colleagues on the Markets Live blog is sort of referring to this as a fine example of stagflation dynamics.
Yes, and Apple has managed to diversify quite considerably. It used to be 70% of revenue was the iPhone. It's now closer to 50%. So it's getting recurring revenue to a far greater extent than it used to from things like Apple TV Plus, App Store, downloads, all those numbers, which they are more dependable than perhaps iPhone, even though the iPhone itself is pretty dependable. So it's no reason to panic from the Apple front, but around the fringes, just a few things chipping away at the story.
Alex, thanks very much. Alex Webb of Bloomberg Quick Take joining us here on set in London. Coming up later today on Bloomberg Technology, Google Cloud's CEO Thomas Kurian will be speaking to the team. That's at 5:30 p.m. in New York, 10:30 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. The Rio Tinto CEO sees China accelerating its growth targets to counteract the impact COVID has had on the economy. Jacob Stoutholm spoke with Bloomberg's Francine Lacqua earlier in Davos on the final day of the World Economic Forum.
China have just always been very good at focusing on, if they're doing a business, they're thinking also about the supply chain, the upstream supply chain. And maybe we in the West sometimes have relied too much just on the market. And what I see now is governments and big companies are much more focusing on how can we ensure that we have a very reliable supply chain, which should come as no surprise when you have as much disruptions as you have.
A lot of investors want to know about iron ore demand in China and how you see China developing over the next couple of quarters.
Yeah, no, look, there's no doubt that the fight against COVID in China has had an impact very short term on the Chinese economy. But China is very determined and seems very convinced that they will be able to meet their growth targets. And they're right now accelerating their infrastructure investments. And when they accelerate infrastructure investments, it's good for iron ore demand. So I remain cautiously optimistic.
Cautiously optimistic means not optimistic, but also not too cautious.
No, look, no, things are not booming, and they shouldn't be booming because it's a difficult world. It's difficult to get the supply chains to work perfectly with all the disruption we have in the world. So it's probably good that the world is not booming, but I see a decent demand.
Bloomberg's Francine Lacqua there in Davos with Jacob Stoutholm, the CEO of Rio Tinto. And it's great that she pointed out his corporate speak there. Cautiously optimistic is a tired phrase indeed. Bloomberg's market correspondent Kriti Gupta joins us now with her chart of the day. Wait, is this focused on mining?
It's not focused on mining.
Oh, okay.
It's actually focused on the S&P 500. But don't worry, it's not tired at all, or cautiously optimistic for that matter. We should look at the S&P 500. I really want to show the volatility. For our radio audience, this looks a lot like an EKG chart, honestly. But stick with me, I'll explain it.
That's a dangerous EKG.
It does look like a dangerous EKG. It's not exactly a good one, but this is what I'm trying to show here. You have two lines. You have a white and a purple. The purple, which shows the rolling 5-day overnight performance for the S&P 500. Right over it is the white, the S&P 500 rolling 5-day intraday performance. The difference is what people, say traders in Asia and Europe, are trading in terms of futures versus what American traders, or at least are trading during American hours. And what you're seeing here is that although it's pretty normal and pretty kind of natural to see that that intraday performance is going to be larger than the overnight performance traditionally, but what you're seeing in the last couple of months is this volatility spike. The range in which you're seeing the moves are much, much larger during the intraday session, which tells you that perhaps a lot of that volatility, a lot of that kind of flip-flopping between red and green, it's really coming from the American hours, whereas the European side, the Asian side, the overnight trading really sticks into a range. It speaks to, once again, what different parts of the world are feeling, Anna.
Yeah, and you wonder then what is driving that volatility, Chrissy, because it has been, of course, the talk about inflation and how high rates get. We saw that as a dominant theme for so long, but now maybe it is about global growth. So interesting in that context, if it's about global growth, then interesting that global investors aren't necessarily creating that volatility that we see in stocks.
Exactly, and I think that's the key point of the chart here, that you're actually seeing that this kind of risk-off mood, it is becoming more in terms of recession odds instead of inflation, and this global recession, regardless of how shallow or deep that might be. And I think this is really where the dollar comes into handy. We've been seeing this correlation between the S&P 500 and the dollar really emerge, or inverse correlation, I should say, and that really perhaps is driving how the world or the rest of the world feels about American stocks right now.
Critty, thanks very much. By the way, we should promo our show later.
Let's do it.
Critty and I are going to be co-anchoring the Open, so join us at 9 o'clock. I'm sure you'll stay watching Bloomberg Television all morning, but if you want to come back at 9 o'clock, you'll see the two of us taking you through the Open of U.S. stocks. Let's get to what Anna and I are watching today. I'm watching pending home sales. I think I really top-ticked the market when I moved back here and bought my house, Anna. Just
well done.
At the highest possible price. Although I got a better mortgage rate than a lot of people are getting. Now we're looking at 5.5% mortgage rates in the U.S., really boosting prices and lowering affordability. So it'll be interesting to see if we get a bigger than expected drop. Already looking for a drop in home sales today, pending home sales.
Yeah, a lot of people focused on the state of the housing market in the US right now and the messages it's giving us about the wider economy. I'm focused on UK politics, but what we will see from the Chancellor today in terms of trying to cushion the cost of living for those in the UK. We're going to hear from the Chancellor a little bit later. In fact, in about an hour and a half's time. And you rolled your eyes when I mentioned UK politics yesterday, Matt. And that was about the parties and the lockdowns.
Yeah, just because who cares if they drink a beer at their place of work,
Times were different then. It was lockdown. Anyway, this is forward-looking. This is about support for families and individuals and businesses that could lie ahead. We will focus on what the Chancellor has to say in an hour and a half's time. That is it for the early edition. Surveillance is ahead. This is Bloomberg.